Beijing gives Wall Street a present. Markets recover again. And is China's IPO train running out of track? The Shanghai Composite Index closed December 10 at 5,161.919 and appears for the moment to be happy around 5,000. The CSI 300 has recovered most of the loss over the past month and closed today at 5,133.56. Shanghai B shares are trending up and back where they were a month ago, closing today at 361.625. Shenzhen Bs closed Monday at 720.287 after rising dramatically since our last episode and are back to last month's levels. Ahead of this week's summits with American officials, the yuan is up, but few serious analysts believe Beijing will alter its gradual appreciation strategy. Morgan Stanley economists are calling for the yuan to reach no more than 6.80 to the dollar by the end of next year. Meanwhile, the impact of the so-called subprime crisis on China remains unknown. The economy continues hot. November money supply grew 18.5% and inflation was up 6.9% in the same period, the highest yet this year, and a big worry for Beijing. The world's regulators, bankers, investors, journalists, and comedy writers have yet to decide whether the current state of affairs is more 1991 or 1998. Is it recession or credit event? Signs seem to point to recession in the United States. The impact this will have next year on China, U.S.-China relations, the race for the presidency, and investor confidence will be important to watch. The 18th U.S.-China Joint Commission on Commerce and Trade opened December 11 in Beijing and will be followed by the third Strategic Economic Dialog, high-level talks that will bring Treasury Secretary Henry Paulson and Vice Premier Wu Yi together again, along with big delegations on both sides. The U.S.-China Joint Commission on Commerce and Trade is a little-known but important body that addresses trade and market access. Its meeting will be presided over on the U.S. side by U.S. Trade Representative Susan Schwab and Commerce Secretary Carlos Gutierrez. I was in Washington, D.C. last week trying to find out if there will be discussion on China's progress towards joining the WTO Government Procurement Agreement. A year ago, Beijing pledged to enter discussions and reveal its first-level market access for government procurement opportunities by December 2007. The WTO Government Procurement Protocol is a potentially huge opportunity for U.S. exporters, and Washington is in a position to exert real pressure on Beijing after 6 years of WTO membership to open its government procurement. But it appears that the meeting will address items from last year's summit, such as getting China to buy American beef. Unfortunately, word from Beijing today is that the Commission is using its time on politically more useful and newsy topics such as intellectual property and food and toy safety. Ahead of the Strategic Economic Dialogue that follows this week, Beijing gave Wall Street a holiday present and specifically answered one of the demands from China currency warmongers in the U.S. Senate. The Chinese State Administration for Foreign Exchange tripled the amount that U.S. institutional investors can put into Chinese stock markets to $30 billion a year. Another indication that money will continue flowing into Shanghai. And it's a sign of favoritism toward the United States, as the recent EU-China summit ended with no concessions. There's more. Beijing will allow Morgan Stanley and Credit Suisse to set up investment banking businesses in China, although it is unclear whether they will be allowed to actually trade domestic Chinese stocks or be limited to underwriting IPOs. A note on this week's U.S.-China summits. They will mark the final official participation by Wu Yi, called China's most powerful woman, as she has reached retirement age and will step down next March when the National People's Congress ratifies China's new government. According to the Standard English language newspaper in Hong Kong, IPO passion in China is spent. High-profile investor Li Shuaqi of Hong Kong says prices are too high. Thomson Financial says hedge fund managers think China may be too risky. And there is talk of IPO cancellations and valuations declining. But so far, signs are 2007 will be remembered as the year of the Chinese IPO. To date, there have been 203 Chinese listings valued at over 88 billion US dollars. 98 of the IPOs were on foreign markets. Of foreign listings, Hong Kong got the bulk of business, but the New York Stock Exchange had 14 Chinese IPOs valued at almost $4 billion as of November, 11% of overseas Chinese listings. New York City Mayor Michael Bloomberg is in Beijing with the New York Stock Exchange president to cut the ribbon on the exchange's new Beijing office this week. And new share offerings keep coming. Here are a few interesting ones to look out for. Vance Info Technologies, formerly WorkSoft, a Beijing-based IT service provider and offshore software developer, will IPO on the New York Stock Exchange with symbol VIT, selling over 7 million American depository shares at a 1-to-1 ratio, priced at $7.50 to $9.50. Another American depository share offer, this time on NASDAQ with symbol ADTV, is Sijin Digital Media Network, an in-store TV advertising network that features slick ads on big flat-screen TVs inside China's growing number of big department and specialty stores. Each ADR will represent 20 ordinary shares and be priced at $13 to $15. On Chinese markets, China Pacific Insurance will IPO on Shanghai and then Hong Kong. China Pacific is the third largest insurance company in China and partly owned by the American private equity fund, the Carlyle Group. No other details at this time. Rural Commercial Bank of Zhangjiagang, Jiangsu Province, will IPO in Shanghai, the first rural Chinese bank to win approval for an IPO. I have no other details on that one at this time. I'll see you next time.